what's happening with it at the minute, because we have, of course, retraced back from 155 down to 141. So in terms of percentage moves, let me just see percentage moves for the highs to where we are right now. We're talking like we're down 8.5%. So Shan, if you're trading this on leverage, then it means that for you to be in danger right now, you'd have had to have done two things. You'd have had to have bought the top, right, on a long, and you'd have had to have done it at more than 10x. And it's hard to shy away from giving somebody advice, you know, but I'm not a financial advisor, and none of this is financial advice. Instead, maybe you can look to your peers and friends and family and ask them what they think about buying the very top of a market at 10x leverage is like. What I can also tell you is, though, that when you're looking at this thing and you've got a range on this from one day to the next, and you look at it in a daily time frame, you think, oh, it went up 7% there that day, and it went up 7% that day, and it went up 7% that day. It would be wise, or 5%, whatever. It would be wise to get in on this thing. But just quick reminder then, 1 hour time frame, you can see here quite clearly, if I just stretch this out, that for instance, during this period of time, it dropped 12%. So anybody at sort of 8x on isolated margin, liquidated, bang, gone. For instance, 10x liquidated, 8x and above. In that period of time there, anybody above what are we talking here? So anyway, you get the point, right? So just so you know, I already entered at 154. I was scalping, but BTC took a big dump with 2 minutes, and I'm stuck now in a leverage. My friend. Shan's play. That was a Shan play, my friend. Sorry, buddy. Right, okay, so what we're looking at here is, all right, okay, so wait a minute. You want to look at it versus Bitcoin, is that what you're saying? Oh, you entered at 154. The pain. Okay, so let's mitigate this. Let's mitigate this first off, right? Let's just kind of put the current price into context of where we are. You know, we've dropped down, but the fact is we're above 139, and that's very, very good for a couple of reasons. We know that there's this toppy area in here where the prices, of course, extended above and below today. At the top end of what I drew on was a bit of a sort of short-term wedge, but that's going to maybe be a hurdle for you, buddy, with the prices coming back up here, in terms of what it would take for you to not get wiped out on your trade with the whole sort of like hodler mentality on a scalp trade. But what do we say about scalpers? You know, scalpers become swing traders, becomes investors. Maybe you're just on your way to being a swing trader with that position to then later becoming an investor, right? Take the Warren Buffett ideology for your trading and give yourself 67 years and you'll be fine. What are we looking to see having happened so far, though, has begun happening, like I'm saying, with the prices being above 139. So 139 right now, you know, obviously you're looking to, you're not in the mode for a hard stop. So I'm not telling you to have a hard stop on this, right? Right now. But that's the play to have at the minute if you're looking for a 5-to-1 risk to reward in it around about your current sort of conditions, buddy. I would be stopping out there at that. I'm not a financial advisor. None of this is financial advice. But if I was trying to trade this short term, like thinking like you are, I'd stop out at 137, and I'd take profit at around about 155, or lower. And that would be my 5-to-1 risk reward at the minute for you.